Yeah, good morning, everyone. So we had a Fed announcing interest rate increase as expected at 0.75. But the more important was the comment post the announcement that the interest rates are likely to further increase to maybe around 4.4% by December 2022, indicating that the interest rate is likely to increase by around 1.25% further from here, which means that another increase of 0.75 in the next meeting is not is possible. The statements came a bit higher than the market expectations, and we saw corrections in the US market, and even futures are also low. Even Asian markets are seeing corrections across the board. Most of the market are down by around 1%. But the commodity is seeing a bit flattish or improvement also. Oil is up by around 0.5% from same time last yesterday morning time. And even iron ore and steel are up in China by around over 2%. So there we are not seeing much negativeness, but apart from that, the equity market across the board are seeing corrections. So quite possible Indian market will also see a similar type of corrections in today's trade. And I'll request technical team to take up from here.
Yes, thank you, sir. Very good morning, all of you. This is Ayush. I'll be taking the technical call for the day. So, as we have seen in yesterday's market, it has given we have witnessed a selling pressure in yesterday's market. Only the FMCG pack was in a good move, and cement stocks were pretty down. And when we talk about Nifty couldn't sustain the higher levels and was continuously taking resistance from 17,800 levels and finally closed around 17,700 levels. Whereas for today, Nifty has given a closing above its 20 DMA, but taking the cues from the global market, we feel it is going to open gap down and it is going to test the lower levels. So today it will take a support at lower levels of 17,650, followed by 17,570. And if you witness a closing below that level, then Nifty will again test 17,400 to 17,500 levels. But if we see a buying from lower levels, then 17,800 will be the strong resistance. And once Nifty closes above 18,000, then only we'll see a strong buying in the index. Whereas moving to Bank Nifty has shown a similar move in yesterday's session. Like Nifty, there's a double top formation in Bank Nifty. A fresh buying will be seen in Bank Nifty only above 41,400 to 41,500 levels. But for today, the immediate support for Bank Nifty is placed around 40,940 to 41,000 levels. And we might witness a fall towards 40,630 to 40,400. 40,000 will be a very important support level for Bank Nifty in the coming days. And if we witness a buying from those 40,000 levels, then the strong buying, as I said, it will come after 41,400 to 41,500 levels. Moving on to Nifty Financial Services, it has given a closing above 18,600 levels, and immediate support for this index is placed around 18,550 to 18,400 levels. And moving on to stocks, Ashok Leyland is still looking good at current levels. One can take a buy call, but it will be a conditional buy call only. Once it is closing over 164 levels, then it can go towards 170 to 175 levels, but keeping a stop loss of 158. It is going to be a very volatile market today. So we request everyone to trade with strict stop losses. I request Nirav to take the call forward. Sorry, Amit to take the call forward.
Thank you, Ayush. Good morning, everyone. So, as per derivatives data front, we have witnessed that from previous 2 to 3 trading session, Nifty is continuously facing the resistance on the upper level around 17,900 to 18,000 strike. While, as I mentioned in previous trading session, also that Nifty is likely to remain in the range of 17,500 to 18,000 strike till it is not giving any breakout or breakdown below this level. As per yesterday OI position, we have witnessed that from 17,500 and 400 strike put rate positions are getting added up, while against it that call rate positions are getting added at 17,700 to 18,000 strike. But the major thing we have witnessed in yesterday's session as per the OI position is that at 18,000 strike, almost 2 million positions got added up more, while against it that at 17,000 strike, put rate positions liquidated around 2 million positions. So this is a negative sign currently as per today's scenario. The position which we are seeing, as I mentioned, about 17,000, 18,000 strike is about the monthly OI position. So for the next week scenario, so currently trend seems to be a bit cautious, but if Nifty maintains to hold the support of 17,500 level, then again we might witness some possible pullback on the upper end towards 17,750, 800 levels on the upper end. Currently, we are seeing that India VIX yesterday closed at 19.5 level and PCR closed at 0.95 level. So till the time PCR goes above 1.15 level and India VIX goes below 18.5 level, then only we might witness a confirmation in the buying in the market. Till that point of time, we should witness some selling pressure in the market. Currently, as we in stock specific, we expect cement sector to show some more negative or more profit booking in the market. While from the positive front, we expect CUP, Gujarat Gas, and ITC. These three counter has shown some good OI positions getting added up in yesterday trading session near ATM strike. So keep watch on these three counter. We expect these three counter to again see some positive pullback in the market. Thank you.
Good morning. Ashoka Buildcon has won a project worth 258 crores from Southwestern Railway for construction of a new line on EPC mode. The project is to be completed within 24 months. This is marginally positive for the company. Also, REC Limited has been accorded the status of Maharatna Central Public Center Enterprise. This will give REC greater operational and financial autonomy. This is sentimentally positive. Now, basically, Maharatna status makes the company eligible to bid for the largest of the government orders and also avail special facilities like better pay, which can attract good talent. Thank you.
Yesterday, we interacted with management of Globus Spirit. In fact, the last quarter result was not good, and post that share price also corrected sharply. The key problems in the last quarter results were two: that their raw material cost increased, whereas selling price has not increased to that extent, and that has resulted into decline in gross margin. And apart from that, their power cost increased very sharply. They have a power based on agri waste, that is husk, or to some extent coal also. So now their raw material is basically broken rice. So now with the ban on the rice export, ban on the broken rice exports, and duty on the rice export, some decline has come on the raw material side. The rice prices, which were at around 1,500 per quintal, went up to as high as 2,100 per quintal, and now that is correcting, and initial sign of it coming down below 2,000 per quintal has come. And going forward with the new harvest of rice, which will be coming mostly in October, November, that can have some more benefit on the decline in the price of the rice. And apart from that, even the husk also can come down on that account. And the company is also shifted to some extent to auction coal, which has also resulted into some decline in the power cost in the coming period. So what the management has indicated, that Q2 will continue to remain under pressure, mainly because of the high cost inventory, and the benefit has just started. So the Q2 will continue to remain weak, but from Q3 onwards, they will see revival in the company profitability. The key benefit apart from this is that they are increasing their capacity substantially. In fact, in the August month, an additional capacity of around 140 KLPD has started, and in last December also one of the facility of 140 KLPD started, and now the capacity has reached to almost at around 800 KLPD, and another around 140 KLPD in different small addition in different plants will be starting by the year end. So capacity addition is quite sharp, and which is likely to drive the revenue and also operational benefit, which will also support the financials. So in near term, stock may remain sideways looking at the Q2 results, but quite possible that from Q3 onward, the company will see revival. Value-wise, if we consider the reasonable bounce back in the next year, that is FY 2024, then the company can do EPS of at around company can do EPS of around 100 rupees in FY 24, and at current price of around 886, the share is trading somewhere around 9 times. So which looks quite attractive, and risk reward ratio at current price are quite favorable. So we are positive from the long term perspective, and the stock can be accumulated with looking at the Q2 declining results. Now I'll hand it over to commodity team.
Thank you, sir. Good morning, everyone. Today, dollar index have risen, so commodities are expected to fall. Yeah, but the thing is that USD also be weakened. So the fall, the quantum of the fall in commodity on MCX will be a bit lesser. But overall, selling on rise is recommended for the day. Gold can be sold around 49,400 with a stop loss of 49,600. Prices can test 49,000 on lower end. Silver also can be sold at 57,300 with a stop loss of 57,800. Prices can correct till 56,300 to 56,000 on lower end. Crude oil, we expect a pullback till 68 to 68.30, whereby it can be sold with a stop loss of 6,900. Natural gas, we expect pullback maybe till 6:30-32, and again selling pressure might be there. So selling on rise in natural gas also is expected. Copper on other end should be in a range bound movement from 640 to 655. So for a trading purpose, one can enter long at 644 with a stop loss of 640 for a pullback till 650. Zinc might witness a pullback, so buying in zinc is recommended at 280 with a stop loss below 278. Prices can test 283, 84 on higher end. That's it from me. Ria can take over from here.
Thank you, sir. Good morning, everyone. So on the currency front, Fed increased their rate hikes by 75 bips, taking the interest rate to 3.25. Now, Fed has given a clear signal that they are willing to tolerate a recession as a necessary trade-off for regaining the control of inflation, and are moving aggressively to catch up. They raised the interest rate by 75 bips for the third time in a row, and have forecasted another 1.25 percentage point of tightening before the year, thus setting the hawkish tone for the upcoming policies down the line. They have also signaled recessions through these statements, such as there will be a below trend growth for US in the coming period, and thus one can expect tough times ahead. Now, there is also escalation on the Russia-Ukraine war situation after the Russian president announced military mobilizations. All these situations are fueled into the dollar index momentum. It has risen quite sharply and is trading above the level of 111.65. It could remain the same during the today's sessions. We are awaiting Bank of England policy as well. So on that front, I think Bank of England will follow the tightening path. The question still remains by how much will they be raising their policy rate. A 50 bips is something that is already been factored in, but I think the need of the hour is 75 bips for the UK. There is also things that complicate today's policy is the new PM trust decisions to borrow huge sums in order to support the capping that they have announced on the energy prices, and also to support the cost of living. Thus, a lot of a huge quantum of borrowing needs to be done on the government part. So how the Bank of England will be handling both the situation is something that we will be looking out for into the guidance of Bank of England statement today. Bank of Japan is expected to keep all the monetary policy settings on hold, including its yield curve control and asset purchases. Governor Kuroda has said that hikes big enough to prop up the yen will break the Japan's economy, since they are thriving to get the inflation on the higher side, and also to have also wanted to increase their trade competitiveness into the market. Thus, you can see that all the international pairs have fallen down quite aggressively. We are seeing a 1.25% downside on the pound and Euro USD. USD JPY is again towards heading towards 145 levels. Even Chinese yuan is trading above 7. So all these will be fueling the dollar index ahead. USD INR has opened with quite a gap up at 80.40. If the situations remain the same, 80.40 is something that it is reflecting the momentum that we have seen into the dollar index. The high is at 80.76. I think one should wait for all the rates to stabilize in today's session in order to trade in any of the domestic pairs. Look out for for USD INR, look out for a breakout of 80.46 in order to go long towards 80.70. Otherwise, keep 80.28 as support, and if it breaches that, you can go short for the level of 80 and 79.90. For the other pairs, for JPY INR, it is already is witnessing a volatile momentum, and it will remain volatile, so steer away from that pair. For Euro INR, it is a gap down. Look for a breakdown of 78.90 to go short into the pair for a target of 78.75. 79.15 will remain a very important resistance. If it gives a breakout to that, it will come towards retracing the fall towards 79.40. For GBP INR, it is a policy day, so remain a little bit cautious while trading into it, because there also we are expecting a rate hike. So 90.50 is the resistance, and 90.12 is the support. If it breaches either of the side, take the trade accordingly, but follow these two levels while trading into the GBP INR. So that's all on today for on the currency front. Thank you.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.